Hi, everybody. Thank you for joining us. We have a special treat today. I am joined by two guys that I know that you all know and love as much as I do. Brendan McKay is our president of Broker Advocacy here at AIME. He is also the president of McKay Mortgage. And Eddy Perez, the CEO from Equity Prime, EPM, to all of us that have worked with the team there. There's a big topic of conversation that has been surrounding EPM since the beginning of the year, a lot of expectations around what was being done and a lot of confusion around what was really going on. So we figured best thing to do, address it head on. That's why we've got Eddy here and Brendan as well, so that we can have an honest conversation about where things were, where things are right now and what our plans are in the future to make sure EPM is continuing to be a strong partner for the entire BAB community. So I want to start with Brendan. Solicitations are the topic of conversation today. From your seat, as somebody who doesn't actually do or didn't do a lot of business with EPM at the time, but heard a lot of the noise before joining the leadership team at AIME, what was your perspective on what was going on? Can you set the scene for everyone that may not be familiar?
Yeah, sure. So I saw a lot of what everyone else was seeing, and it was just kind of posts getting leaked out, whether it was on BAB or a different group or here or there, and it was screenshots of text messages or emails, from somebody at EPM reaching out to clients about refinancing, to past clients about refinancing and the language could be a little confusing as to whether it was retention team or solicitation. It was just kind of, well, what the hell's going on here? AIME has a strict no solicitation policy, and EPM's a longtime valued partner of AIME. So just figuring out what was going on. And I did have a past client that I closed with EPM last year, and I got him too. I didn't post them all over the place, but I got him as well. And it certainly got my attention and made me wonder what was going on. And that's why I'm glad, we've had conversations since then and are going to talk about it today.
Awesome. Eddy, from your side, because I know there was a lot of back and forth. We were sending a lot of people y'all's way trying to figure out what exactly was going on. Can you describe and set the scene for everyone for what was happening when a lot of the noise kicked up early in the year?
What do you want to know, like, exactly on that part? Like, just what we were hearing or the intention, or what part of that exactly?
A little of both. Yeah.
Okay. We were hearing a lot of you're reaching out to our borrower, we thought you weren't going to do that, and such and such and such. So, we viewed it as really an education process. The challenge is, we messed up. Some of the messages we put out were not the best. They weren't like what Brandon really said earlier is there wasn't good enough clarity, like specific clarity. It was a little bit of what wasn't explained. And that was the big part of, I still viewed that as an opportunity, because I've never believed if somebody's upset that you ignore them. You got to address that and really explain better. So that's where we took it from that. And, I had done a interview with Frazier and put it out there, but I thought more and more clarity needed to be put out there. And the good part is, luckily, some of the things that we had talked about together here with AIME have been put in place, especially the technology side. That was I'm not a tech guy. I'm never going to plane. It took a little bit longer because I've learned of what spaghetti programming or whatever that stuff is.
Tech spaghetti. I love it.
Yeah. So what that really meant, but what I do know is it's working today. People are getting a lot of the notifications. There still needs to be more clarity that I definitely want to talk about here, because as we jokingly have said, there is some way data gets collected nowadays that really shows what's going on and how the customer, even though they may have not, quote unquote, had their credit pulled or had a payoff request, they still really are very engaged in shopping for a mortgage and the opportunity. It's just nowadays, just the new wave of data that they can collect, and really, as crazy as it sounds, they know the behaviors that you're doing.
Exactly. And from our side, right here at AIME, because I got a lot of those conversations sent directly to me. The thing that both Brendan and Eddy have touched on that I think is the most important, the intention was always good. The message and the execution is where I think things floundered a little bit. And we've had that conversation offline. Eddy and I have, and Brendan has been a part of a lot of those chats as well. The goal was always to get the consumer to call the broker back, where the technology lacked on EPM side. And while we love that UWM has a lot of this stuff. They're a lot bigger and they've invested in technology a lot longer than some of our other partners. So EPM's been working on putting tech in place the entire year that helps facilitate this process more effectively. But when the year started and we started seeing all these additional inquiries, the automation that existed was, this consumer is shopping, they're in our portfolio, we know they came from a broker, but we don't necessarily know who they came from. So we're going to send them a message, tell them to call their broker back. And if they can't call their broker, call us and we'll try to connect them with the broker. The message itself was a little unclear, and we've all acknowledged that. Those have all been updated. But what you guys also did was actually put more processes in place. For those that are unfamiliar with tech spaghetti, because I live in this world all the time, it literally is, imagine a plate of spaghetti. And if you pick up a noodle, you don't know when you pick up one end of the noodle where the other end is and what other noodles are going to get moved when you pull it out. That's what tech spaghetti is. It's tech debt. It's things that have happened over an extended period of time where you've developed in different manners that work for that exact thing. But when you start trying to unravel it, you don't know when you pull a different string, what else it's going to break. And that's tough for people that have, if you've invested in technology before the last 5 years, everything has shifted to cloud-based. Everything's in a different code base now. It's just different. It's not right or wrong. It's just different. So you guys have been working really hard this year. Touched on the creepy data part, but as far as the process of things that have been put into place, can you give us a quick overview of what happens, creepy data to connecting them with the broker? What's the high level view of what's going on?
There's kind of two ways. If it's a straight up, the easy ones, I'll go with the easy ones first, which is if you get your credit pull, if you get a payoff, you'll see text messages, emails, you'll see multiple forms of communication. And we're very, upfront about it, saying, hey, look, please get in touch with these people. This is high alert at this point. It's like basically about 24 hours.
Yep. So
that's
high alert to the broker, to be clear.
Yeah, it goes straight to them. Like they just get a text message and shows up randomly.
That's the easiest.
And this is new, right? This is you guys.
Yeah, this came out about, I'd say a little over a month ago, only because now, instead of hearing one side of it, I'm actually hearing the other one, like, oh, wow, I'm getting it.
Yes.
I know that sometimes my loan officers still aren't calling the lead, but at least I appreciate that you're putting that out there. And it's now on me to make sure that they take action. That's not on you. You guys have to do something about it later. We get it. You've done your part. That's the easy part. The creepy data, as explained to me, is there's 40 different ways they can track if your customer is shopping you or inquiring or just looking around. And I know that, look, I was an originator. I've been a broker. I get, well, what are you talking about? I took care of that person. Why would they do that? Look, sometimes it's just harmless. They're just checking it. But from Credit Karma to a lot of these places, they're getting soft pulls. Soft pulls actually now get sold by the agencies. A lot of people don't know that. And it goes into the software. So with those, we can't come out and say, hey, look, we know what you're doing. That's going to be it's a lot different than, like I say, a credit pull and a payoff. Yep. They know action's been taken. But in this one, they may be inquiring or they may be doing their own homework to call you back. The message, just to make sure it's met in all compliance standards, says, hi, this is such and such. We would like to help you out, or please call your broker. A lot of times they're calling the broker. And it's working out amazingly well. The only challenge we've seen is sometimes the brokers get a little bit upset and they say, is this a race to the bottom? You're competing with us. No, if they're calling you, I always say this, they're not calling you, I don't want to say out of the goodness of your heart, but you're top of mind. Why are you top of mind? They know through their actions, they were looking around doing stuff. And then they get this message like, oh, well, I was inquiring, let me call now. So in their mind, in their truth, maybe they won't quote unquote shopping, but trust me when I tell you, when those text messages and all that go out, they're calling you for a reason. It's been very clear, and it's the reason, it's the last word we say. You see, everybody remembers the beginning and the end. There's a reason why the last thing is your broker. It's purposely in there so that it's top of mind to get that reaction from the community.
And I do think there's a point in the message it's worth clarifying too, that the messaging from EPM has definitely improved from where it started. There's no doubt about that. There is something, Eddy, that I wasn't aware of until you brought it up, in that you guys don't mention the broker by name because this is a gray area in compliance.
Yes.
That you feel that doing so would be non-compliant. We know that there's other lenders that don't feel that way, and I'm not going to pretend to be an expert on it, but I will respect the fact that there's lots of compliance issues that lenders take, their attorneys, more importantly, take different opinions on.
Yeah.
And that's like, what, okay, fine, I can respect that. Like, that holds up as far as I'm concerned.
Yeah, no, we just don't, to your point, we've done well for ourselves and we're well capitalized, but we're not as capitalized, being honest, than other people are, where they may want to take that battle on. It's just, it's one of those, it's part of the servicing. Are you confusing the customer? Did you lend to them or did the broker lend? It's one of those that.
Yeah. The point isn't, are you going to win the lawsuit? The point is not getting sued in the first place. So
yeah. And that's why we say your broker, and we see them actually calling and knowing exactly who it is. It's gotten the point across while we've still walked the line and not crossed it into potentially gray areas.
Yeah. And to both of y'all's points, we see people, I mean, just as a broker, right? You guys can probably look, brokers that are listening, y'all can look at your own business models compared to the broker down the street or in a different state and have very different compliance protocols in place. It's the same thing on the lending side, right? It's a risk assessment for anybody making that decision. And for y'all, it's an area where your attorneys have come back with very clear guidance, and it's getting the message across. So the fact that the phone calls are happening is good. And I think sometimes we've got members that are a little bit defensive of saying, well, why'd they even get the message in the first place? Well, they got the message and they called you. That's the goal, right? That's what you want them to do. And the fact that the borrower is referencing the message that they got lets you know that EPM is sending these things out, trying to drive your customer back to you. That's the goal. We want them back on the phone with you. Eddy, I know we've had some conversations or some feedback where people say, all right, I got my customer on the phone, but they got quoted from the EPM's retention team with a rate that I can't compete on. I'm going to lose money even if I close it for free, I'm losing money on the deal. We've talked some about ways that we can address that. Where does that stand on y'all's side?
Well, we always give a time frame first to the broker, like I was saying earlier with Brandon. A lot of times it's been, being very honest with you guys, 2-3 days that it's sat around, and these are truly hot leads. And I'm not talking about warm. I'm talking about these people have already made a move.
Yep.
Like it or not, I always say this, the consumer has one way or another raised their hand. I'm looking to refinance or at least talk about it.
Yep.
It's only on refis. I'll tell you this right now. Some of the times they've come back and had purchases like, oh no, I'm buying a second home. We've given that every time to the broker. Some people have closed second home and investment properties that way. We don't mess with any purchase relationships, anything of that manner. It's just what is actually on the book, like truly on the book. And if somebody's also selling their house.
Eddy, when you say the book, you're talking, just to clarify for everyone, you're talking about your servicing book, right?
Apologies.
These are the loans that you guys service. But I think that's an important distinction, because a lot of members may not be aware. For the loans that you close, what percentage do you retain and service yourselves?
100%.
Exactly. So these are assets that are on the book that are also driving a different part of the business model for EPM. So allowing them to walk out the door because somebody decides to not call their consumer back, it's going to have a negative impact coming back to wholesale. It's going to change pricing, right? Like you got to make it up somewhere. You have to increase your margin up front if you're trying to hedge for a loss of the asset on the back. Yeah. We're trying to not do that, right? We want to stay as competitive as possible and serve as many consumers as possible. But that means when you guys get these leads, you got to call. It can't sit there for 3 or 4 or 5 days, because that customer is going to find someone, and we'd rather them find someone that's going to keep them at an AIME partner like EPM and keep them on the book than go off somewhere else and wind up in Quicken's database, and then you're never going to see them again.
It's about 6 people. Yeah. Sorry, it's about 6 lenders that are actually, when our data has shown the amount of volume, it's 6 that have gone, and it's not to our own community that we serve.
Exactly. Yeah, we've looked at the information. We know who they are, and they're not people that we are partnered with, and they're not lenders that we will.
It's not the brokers. It's not even the brokers. A lot of them will bring it back to us, and we work with them on pricing. Like, hey, do you want to do this? Maybe lender paid or borrower paid. How do we still get you something? Yep. We always deviate it there, because all we're trying to do is just keep it on the books. This is not, I will repeat, a moneymaker. This is just truly what it's called, retention. Just retain, not retain and make. It's just a retain.
And from the broker's perspective, and why, like, I'm okay with this personally, because I would love everything to be black and white. And it's just like, first of all, I would love for every lender we work with to never have a retail leg, and never this, never that, and service every loan and always give it back to us. But the world simply doesn't work that way, and every lender's business model is going to be a little different. And EPM's, frankly, they provide brokers products and specifically products for certain levels of credit scores that other lenders are simply not doing. And because of that fact, and the fact that they're servicing these loans, but even if they sold them, the same thing would be happening to these loans. They get targeted incredibly aggressively. Because guess what happens when you have a 580 score government cash out refinance that pays off all their credit card debt, and 7 months later, guess what happens to that person's credit score? Rates could even go up a little bit, and that person should still be refinancing.
Right.
And every call shop in the country knows that, and they specifically target these types of loans. So where does it all circle back? It's good that EPM is servicing them. Yes, it is incredibly important that they keep these loans on their books because of they're getting targeted more than Home Point Services is, or UPM servicing model is. So yes, they are going to put a weight on retaining it. And the fact that they're even coming to the table with us and pushing the brokers to get the business as much as they are, I think is awesome. And now they're being transparent about it. And I guess they're communicating it better than they were before. And I give them a lot of credit for that, for sure.
Yeah. And just so you know, just to add a little bit of that creepy data, Brandon, the reason the customer even knows that their credit scores are going up is, I don't know if anybody knows this, one of the biggest data resellers is Credit Karma.
Yep.
Even though it's not a great predictor on credit score, that's where they're watching it, where your bank even tells you, hey, have you seen your credit scores? They've shot. Those notifications wind up getting soft pulls that wind up getting resold, and that's how they know how to target it, because guess what? Somebody goes from a 580 to a 660, 680, that's a straight slam dunk. Streamline, Earl, the USDA Streamline, those are all easy. I mean, that's the easy stuff. And it's just sitting there. And that's part of the good things of, looking out for the borrower and really looking out for their best interest. And that's what, unfortunately, to your point, because of how data is today, it gets monitored harder because the opportunity is better. So you said credit scores can, rates can go up, but it's still a good deal.
Yep.
Exactly. Well, and a lot of it is, it's one, the creepy data, we'll keep calling it that side of thing, actual activity that's being monitored. But a lot of it's also just predictive models, right? Like, most likely a certain percentage of loans that close at EPM that are on those books fall into a certain credit band. In the next 6 to 12 months, a large percentage of those borrowers are likely going to be ready to refi or to roll into a different product, whether you've actually seen activity from them or not. It's all public record. You can buy any of this stuff. It's not hard to find. And these aggregators and call centers, and I know, because I've mentioned this to Eddy and to Brendan multiple times, I ran one. This is what I did before I got into wholesale. So I know this space. This is my first job in mortgage, was learning portfolio retention for Pacific Union Financial, which ran at the time the exact same model that EPM does, right? We had a consumer direct team. Well, we actually had a consumer direct team there. You guys just have a port retention team.
We just have retention.
But I had 40 LOs on my port retention team trying to protect a portfolio that was full of Govy loans that all were sub 680 credit scores. And we had PennyMac and Freedom and SunWest and Quick constantly attacking. They just attacked the whole port because in their mind it was, if it's being serviced by Pacific Union, it's probably somebody that's worth talking to in the next 6 to 12 months. I don't even need to know if they're interested. I just know it's on their book and I know what kind of business they typically close. It's an easy thing to attack. And you guys are falling into that same, it's to Brendan's point, under attack a lot more than lenders that are out there that serve a different consumer profile.
And even to add a little bit to that, what's funny is because about 50% of our business, I think it's actually technically 48% of our business is conventional. Here's the funny part. It's only California that's getting solicited out of my conventional portfolio. This is very strategic.
Right.
My Florida business, never. Like, I swear, never. Business I do on the East Coast, middle of the country, no. But it's funny. It's all Govy and anything conventional in California, because as we know, California has the fastest refinance rates because they have the highest property values, a quarter interest rate because their closing costs aren't crazy, actually saves these people a lot of money.
Yep.
And to your point, most of my payoffs, I either look at it, I don't want to say we joke about it. We're like, all right, is it California or is it Govy? And
one of the two.
Yeah, it really, to your point, these folks know, and you can't be mad about it. That's the data. That's the business. That's the industry. It's how it is.
I also think it's worth noting something that I've realized a lot of brokers are a little bit less familiar with, because obviously they're not necessarily working with servicing assets and what that looks like on the back end. But you guys can actually get knocked if your VA business churns too quickly. Do you want to give a little bit of context there? Because I think that's something we don't really talk about a ton, but that falls into that Govy space. Is really important that brokers understand what's happening there for lenders that are servicing.
Yeah, so Ginnie Mae, who creates the securities for all the Govy products, essentially put in a restriction for VA loans. That's why there's such the time period. But they also measure you if your book is churning too fast and going somewhere else. If it stays with you, they view it as, okay, you're giving the veteran a better deal, you're making the situation better. Even if it closes somewhere else, but then winds up right back at you, because we've given some back to the community, they view that as a huge positive. But if there's too much of a churn, you can get in trouble where they start putting you into different buckets, and you cannot longer securitize them one way. You got to do it as what it's called a spec pool.
Yep.
And that hits pricing as well. And in the end of the day, who's really affected here? It's always the consumer. It's always the consumer in the end that's going to pay for it. And, we all are an industry that advocate for the consumer. We got to advocate on the front end, not just the back end, but the front end as well.
Yeah. I think all of this comes back to, these are all things that we have to be aware of, because they do impact your ability to work with consumers in the future at EPM. They're going to impact pricing. They're going to impact product offerings. They're going to impact overlays, because these are things that have to be protected when they become assets that are retained on the book, right? Like, we have to know that that's the thing. I'm with Brendan. It would be great if every partner we had sent every deal directly back to a broker and we could turn it, but that's not the model of being a lender. There's got to be a little bit of give here. And the goal here is, how do we notify as many borrowers as possible to go back and work with their broker? But brokers, now y'all have to work on the other side and say, I got the notification, I'm calling them today. It can't sit for a week. You've got to call them now, because they're most likely not even going to go back to EPM. They're going to go to Quicken, or they're going to go to Freedom, or they're going to go to SunWest or PennyMac or someone else, which isn't good for you either. The goal here is keep the customer in our community where we know we can serve them the best way possible. Brendan, from your side, there's a lot of things that Eddy and the team have always been transparent, but I think we're at the point where we're communicating more clearly, which we've all acknowledged now, and what's going on. The name of the game for Eddy has always been transparency. He does not shy away from these conversations. He'll talk to anybody about anything at any point in time. So that should never be a concern. We're doing so in a way that I think is explaining things in a way that's a bit more relevant to our community and how it impacts them directly, which I think is good. Are you happy with the progress that's been made, and what would you like to see from EPM going forward?
I am. So I had never met Eddy before we started engaging in these conversations, which, hey, it's always an interesting way to meet someone for the first time over Zoom. And then the conversation's like, hey, jerk, you're soliciting clients. What's going on? Not the most fun topic of conversation either. And I've been, I knew him by reputation, and I've been super impressed. He has been incredibly transparent. And as soon as we brought the issue directly to him, he took it extremely seriously, acknowledged the communication mistakes they were making and the problems that they had in their process. And the very next call was with their retention team and their tech team. And we saw, after our first call with Eddy, and then after the call with the tech team, we saw notable improvements. I mean, the way I gauge it is I see less complaints about it and less problems coming through, and less people messaging me or Katie telling me it's still a problem and stuff like that. So it's hard to gauge stuff because I'm gauging it by the lack of things happening. Or the absence of it, but it has been, and I've been impressed, and I expect the lines of communication to continue being open and improvement to keep happening. So yeah, for sure.
And Eddy, from y'all side, what are some things, and we've touched on a lot of them, but what are some things that brokers can do to help partner in this process? How do you guys want to hear feedback? What can they be doing? We've talked about quickly calling consumers when you get these notifications, give them a call, reach out, talk to them right away. But what are other things that our community can do to help support EPM to continue to grow this partnership moving forward?
Well, that's the first one. To be honest with you, that's also the number one complaint we get. Oh, wait, you told, because then we hear it on the other end. We're just not, I don't believe in throwing at anything. And by the way, Brandon, when you said, hey, you were doing this, I don't I don't take any of that personally, because let's be honest, some of our communication was not the best. I'll always be the first one to look in the mirror and see what we can do better. That is the first one, because the number one complaint I get later is, hey, you're here, we want to do a loan, we haven't heard back, or they talked to me once and they're coming back. That's just it. That is probably 1, 2, and 3. If you want me to be honest, 1, 2, and 3 is these are hot leads. Even if they say they're just shopping, they're not. And it doesn't mean that they're going to pull the trigger. That's a different story, but at least it means they're interested. Yeah. And that's more than what a lot of people are. And that is what I would tell you is 1, 2, and 3. And then the second one would be, come back to us. See if our pricing is not the best on that one, we will work hand in hand. Now, we may not be able to compete with somebody, but we will get really, really close. And at that point in time, that's where partnerships work, where each people give a little bit to make sure that it's for the betterment of the good. Because to your point, I want to keep offering these products. I'm not going to sit here and throw this gauntlet like, if you don't do this, X. That's never going to be us. That's never going to be us living our own virtues, but it can affect pricing at times because the runoff is real. It's real. And we expect some of it, by the way. Like as crazy as it sounds, we expect 40% to run off. We're not upset when 40% runs off. That's kind of the nature of the beast. And we know that. It's when it gets to be higher, as it has been. That's it. That's all I would tell you is just work with us. If we did the loan on the first one, there's a good chance that yes, some of our procedures and policies did help them not just doing the loan get their credit score up, because also in our servicing, we've taken a little bit of more of a holistic approach, because servicing is not the best in our industry reputation wise. Right. So we give outreach, we throw out education videos. We're always telling people how important it is to work on your credit. Because one thing my father taught me was in this country, you can be dead broke, but if you have high credit, you'll always find a solution. But you can have money, but have terrible credit, and you can't get anything for yourself. And that's one of the things we're trying to educate and really raise the consumer to the next level. So it's going to show some fluctuations because we're doing that purposely, very intentionally to raise their credit score to make sure consumers are in a much better position. So I just say, hey, work with us. I know that you may work with another lender and maybe they're a smidge better on that one. We're willing to make it right. If you're willing to do borrow paid, or we're willing to bend here. And also, I guess that's two. The third one is sometimes when this credit score shoots up all the way, you may not be able to make the whole overall comp. That's been the one thing, like, well, wait, I want to get my full comp. This customer is not at the same level that they were once. So the ease part comes in. So I would just say a little bit of some honest perspective and just talk to us. I mean, I've heard some great things recently about, the trigger information, the texts that go out, alerting them, the alerts, and people been very appreciative.
And I want to touch on that too. Like, we've said partnerships a lot during this conversation, and partnerships a word that we use often with AIME and the lenders we work with. Partnerships go both ways. And I think this is something that the past generation of brokers, frankly, was better at than the new generation. I mean, we're mercenaries, myself included, and I love it. Brokers are better. We want to get the best deal for our clients, but you cannot be unbelievably that transactionally minded. You need to look at the bigger picture sometimes. And if we like having lenders like EPM, meeting us at the table and having aggressive pricing on clients that we need to service, you need to think of the big picture and you need to step up and get that loan back to EPM if you can, and take that relationship seriously, because they're taking it seriously and you should too. Absolutely.
And by getting it back to EPM, obviously assuming pricing is within the range, and everything that I have always heard is that it always is. I've never heard any stories from any brokers that have reached out to us that have said, well, I can't send it back to EPM. They're half a point off. That's not the case. I guarantee you, if you talk to the team at EPM, they're within range of any other lender out there when you're looking at these deals to send back to them. But you're also guaranteeing that you've got a partner that's going to continue to notify you when that consumer shops in the future. And if you take them somewhere else, you take them out of our community, you're not going to get that, right? And yes, you can set up CRMs and you can be as automated as you want, and that is awesome. And you should stay in front of your customer, but it can't hurt to also have a partner that's watching your back, right?
Especially with the data they have access to, like Eddy, the creepy data stuff we're talking about, where it's literally tracking people's online behavior. That is software that is too expensive for 99.9% of the broker shops that are out there.
Exactly.
But EPM and other lenders can afford it. And if they're essentially sharing the data from that technology with us, that's something that we just don't have access to otherwise. So it's awesome.
That's where it's all coming from.
Yep.
It's one source.
Exactly.
It literally pulls all of it.
Exactly.
Yep.
All right. We are running out of time. We could keep talking about this for another hour, I'm sure. Eddie, I'm going to put you on the spot. I have a question for you because we have a big event coming up soon. Fuse is in just a few weeks. We are so excited. What are you most excited about for the event this year?
Selfishly, to see everybody.
I
I've always been a big camaraderie guy. I like seeing people. It was great seeing people at the Vetted VA event. I just want us to all laugh and have a good time and even have some of these conversations, I think the human interaction, that's what I'm really looking forward to, because I'm sure, I've seen it. There's going to be great speakers. I met Magic Johnson once at another conference. Great stuff. But at the end of the day, I want to see all you guys. I want to see everybody out there. I want to meet new people. There's people that we've all seen each other online, chatted, made comments. It'd be great to say hello. Good thing is I can say that I'm fully vaccinated, so doesn't mean anything. But I just wanted to say that I've had COVID too, so I think I'm pretty safe and all that.
It means something to me, Eddie.
So, it's one of these that just looking forward to seeing everybody. That's the big thing.
I think it's one of those qualitative things around Fuse. We have so many people. Our online community has doubled in size since this time last year, over doubled actually. So when you look at that, there's a lot of people that have never had a chance to experience an AIME event in person. And it just, to your point, the content is great. We're going to continue cranking out great content, whether it's at an event or online or through the podcast or through the sales rally or broker playbooks or any of the other outlets that we have. You can't match the networking opportunities that you have at events like this. The knowledge exchange that happens online is great. The knowledge exchange that happens in person is unparalleled. So if you're on the fence, if you haven't gotten a ticket, buy it. If for no other reason than to come meet Eddie and Brendan and myself in real life, we want to talk to you. EPM will obviously be there. You guys have been a huge supporter of AIMS for a very long time. We're excited for this partnership to continue to evolve and move forward. And that's the thing that we're focused on here, right? We want to work with lenders that want to work with us, that take feedback, have honest, transparent conversations, and continue to support the community however they can. And that's exactly what's been happening with EPM this year. And I'm excited that we've got some of these new technology initiatives that y'all have been talking about for quite some time that are now live. So hopefully you all experience it yourself before Fuse, so you can give Eddie and Salim and Carrie and the whole team over there some feedback.
There's gonna be about 20 of us there. There's a lot of us.
They got a whole crew coming.
Yeah, there's a lot of people going to be there. A lot.
Yeah. Awesome. We're excited to see you face to face. Everybody else, if y'all have questions for EPM, obviously you can go find them at Fuse. They will have a booth in one of our exhibit halls, very large booth, very prominent, in a great spot right there in the middle. If you would like to talk to them ahead of time, drop us a note below. You can reach out to anybody on the AIME team. We'll connect you directly with the team over at EPM. Eddie, Carrie, the whole crew, they're always willing to have a conversation. If you have any questions about how this process works or what you're experiencing yourself, we want those lines of communication open. So Eddie, thank you so much for joining Brendan and I today. Hopefully this helps clear up some of the confusion that's been floating around out there. And we'll actually have some ideas for you for after Fuse on content that I'd love to talk to you about. So I'm sure I'll be talking with you soon on some more stuff that we can crank out together.
Sounds good. And definitely thank you so much, Brandon. Thank you so much, Katie, for your time. And more importantly, thank you to everybody that's going to listen and watch this all the way through. Always feel free to provide suggestions because, like I always say, we can't fix anything if we don't know about it. So I'm always one to listen in on what's going on.
No,
awesome.
and cheers. Thank you to Eddie. And like a way I judge all my lender partners, like I expect mistakes to happen, but it's the way that you step up and hold yourself accountable and fix it. And you guys have done that here, and I have nothing but respect for you for it. So thank you.
Thank you. You're welcome.
All right. We'll see y'all soon.
Take care.